Well, stocks are crashing, and in today's video we are going to be covering what's going on and answering that main question of how to prepare for the 2023-2024 stock market crash. So I hope you guys all enjoy this video. If you guys get anything in value out of it, hit that like button, subscribe. If you guys are new to the channel, we talk about everything money. Stocks, money management, trading, investing, credit cards, news. So subscribe, join the team. So let's just jump into this one. All right, so as of today, the S&P 500 has sold off about 1.37%, which might not seem like much because the stock market fluctuates. It goes up and down, so getting sell off of 1%, we could be just having a bad day. But one of the main reasons why investors are getting scared and nervous and why we're possibly on the edge of a recession or a crash in the market is because in the past month we've seen sell-off of 6% in the S&P, which is a decent amount of money. And some of the reasons why we're getting sell-off is some of the things that I think you and I know. We've seen super high interest rates. Interest rates stunt the economy. They pretty much just pause it like a TV remote. Not to mention inflation. I think we all know things are getting more and more expensive, which will slow the economy down as well. And we've seen a ton of analysts come out and pretty much say that there is a 70% chance of a stock market crash in 2024, which is crazy. So anytime you have those types of announcements, you're gonna have investors get scared. And what happens when investors get scared is they pull out their money and they leave it as cash. Nobody wants to invest if they're scared, nervous, or have any type of emotion with the market. People want to invest and be like, yeah, the stock market's going to the moon and be super confident. Nobody wants to invest now because the stock market could get obliterated tomorrow. And honestly, there is still conflict overseas, which will always put tension on the US and on the US economy, which could cause a little more sell-off as well. All right, so now that we kind of understand what's going on, now let's talk about how to prepare for a crash. All right, so one of the main questions I always like to ask people that ask me this is, what is your time frame? For me, I am such a long-term investor that short-term volatility, sell-off, honestly, I don't get scared. I look forward to it. The reason why, I think we all have heard the expression buy low, sell high. So anytime we get sell-off in the S&P or stocks I like or indexes or ETFs, I look at that as an absolute for sale sign to buy as much as I can. Now, like I said, buy low, sell high. So for me, getting sell off, I look at it as I'm buying and I'm holding forever. And the reason why I say that with so much confidence is because over the past 90 years, through all the ups, through all the downs, through the Great Depression, through the 2008 crash, through the dot-com bubble, we've seen an average return rate of about 10% of the S&P 500, which is a decent amount of money. But if you guys invest during recessions, that jumps from 10% to 22% on average if you guys invest during recessions. So for me, I look at recessions as, grabbing the money and I'm buying as much as I can because I understand the long-term outlook of investing during dips. Now, if you guys are people that are possibly on the edge of retirement, or maybe you might need cash, because I think we all have gotten stressed for cash before, and maybe you're like, Carter, should I sell? I'm up on my money. There's no problem with selling if you're up. One of the things I've always said is I've never lost money taking profit early. And with that being said is if you're nervous, it's completely normal to sell your shares during these times. It honestly is. If you're a little older and you're nervous about if should I pull money out, maybe you're planning on retiring, there is no problem with pulling money out and looking at a high yield savings account that will offer a 4.5% like with SoFi, and you don't have to worry about it. There's no stress, and you can get some extra money that will build up over time as well. And obviously there is some drawbacks with those just because they can fluctuate. Maybe this year they're paying 4.5, maybe next year they're paying 5, but maybe the next year after that they're paying 2. So it does fluctuate depending on the interest rates. As of right now, we have high interest rates, which will cause high yield savings accounts to be a little higher. So honestly, if you guys are nervous about this, just ask yourself that question of, okay, am I a long-term investor or do I need this money? And I think it'll answer your question. So guys, I hope you guys all enjoyed this video. If you guys did, hit that like button, subscribe, and we'll see you guys later in the next one. Take care.